Hey, what's up, everybody? Welcome to episode number 115 here on season 1. Today we are talking about, should I buy gold and silver? Yeah. So should I buy gold and silver? I totally just drew a blank. Before the market correction. This question comes from Timothy Pfizer. And he said, should I get ready to buy gold and silver to prepare for the market, to prepare for a market correction? And first, I got two questions. First of all, question number one is, why are you not already buying gold and silver as a form of investment? And second of all, if you are, then I assume that you're asking, should you ramp up your account and start allocating more funds towards gold and silver instead of like stocks and that kind of thing? So anyways, and honestly with you, I assume that it's probably the second, to be honest. So first of all, so over here you'll see basically a chart. It'll list the 8 biggest declines in the S&P 500 over the last, I think the first one was in the 60s, or even actually probably before that. And yeah, so the first one, or since the 70s, and from there you can see that basically gold, so if it's green, it means that it beat the S&P 500 that year. It means that there was actually a positive growth that year. There was only 2 cases where gold fell. Gold fell 46% in the 80s after the biggest bull market run, and then also it fell 5% more than the S&P 500 here in the 1930s. So if you buy gold in the stock market crash or correction, you most likely will generate some form of income. However, if you're looking to buy in silver, you're probably not going to make money. You'll probably lose more, if not the same amount as what the S&P 500 would lose. So there was only 2 positive growths, which was the first crash here in 1976 and in 2011. So obviously it's not the best idea to buy gold or to buy silver to hedge against the crash of the stock market. Let me go ahead and find my place here. And that's because the reason why gold, so I would toss out silver altogether if you're trying to hedge against a correction. I think it's a great investment. I think that you can definitely generate some safe returns. However, I think that it's something that is more long-term and not so much a hedge against inflation. Anyways, the reason why gold goes up is because gold is negatively correlated with the stock market. The stock market growth. So as gold rises, the stock market goes down, and as the stock market goes up, gold goes down. And or it could be something else, an unknown factor that we don't know, a C factor. So with a correlation, usually it's A affects B, or B affects A, or it's a C affects B and A. So we don't know specifically what it is. All we know that they're correlated negatively. But this makes sense because stocks benefit from economic growth, where gold benefits from economic distress and crisis. So typically, as a correction or a crash starts to happen, you see people take their money from stocks and throw it into gold as like a safe haven for their money until they feel like the market's going to rebound, and then they move it back over into stocks. That's it. So for right now, for your account, I would focus more on proper asset allocation. Instead of trying to time the market. Most people try to time the market because that's when you can get rich. However, it's also when you can get poor. So I would focus more on proper asset allocation. If you want to go more heavy into gold, I would start adding more gold to your portfolio, and I would write out a strategy on how you're going to do that. What percentage are you already invested in the gold? Or if you're not, how much would you like to invest in the gold? 20%, 10%? Those are just numbers I'm throwing out. Those aren't like numbers that I would personally do. They're just, just to give a percentage. And then I would ramp up the account to that level, hold it there. And how long are you going to hold it there for? Are you going to hold it there for 2 years, 3 years? How long? At what point does the correction not happen? At what point does the correction happen and you go back into those stocks and ETFs and that kind of thing? So that's what I would focus more on is proper asset allocation, and the strategy of once you get into gold, how do you plan on going back into the stock market, or do you just plan on keeping a certain allocation towards gold forever, basically? Anyways, a quick side note, I am really interested actually in how cryptocurrency will do during a market correction. We haven't seen a whole lot of market correction with cryptocurrency, and so I'm interested to see if it will rise or fall as the stock market rises and falls. But anyways, let's go ahead and dive into the question of the day. And the question of the day is, this one was random, but why does this guy at my school keep touching me when I wear heels? And I don't know. I can't even answer that. Number one, maybe he likes you. Number two, he's a creep. Number three, he thinks that wearing heels means that he can touch you. I don't know. Let's be honest. Guys do weird things. Anyways, if you guys have any questions regarding Stash, Acorns, or Robinhood, as well as general investing advice, business etiquette, or coaching, feel free to post those down below. And until next time, don't forget to subscribe right up here and check out what's my strategy on buying gold and silver. And then check out this other video right here. And as always, thank you for watching. I really appreciate it.